Hello friends, once again I welcome you back to the channel. So if you're new here, I would suggest that you subscribe to the channel, and if you find this video helpful, please endeavor to like it. So today we are going to be talking about range break, and we are using range break 100. We are going to be using basically an indicator, so this is going to be like an indicator setup, you get. But now in this video, maybe the other thing that I can talk about is that we are going to be using the 15 minutes time frame. I can't say this enough. For those, I always say that for those that have been here for some time, you know that I love the 15 minutes time frame so much. For me, it's really easy to do my analysis there. At least most of the time, I can spot opportunities in a given day, you get. So that's basically it. Then the next thing that I can say is that I'm beginning. So we're on the 15 minutes time frame. As you know, by the range break and any volatility and any synthetic index, we can use price action basically. But if you prefer using indicators, it's also okay. But I always say that it depends on how you use these indicators, you get. It depends on how you use these indicators. But most on the 15 minutes time frame and above, you're going to be seeing the break of structures. For instance, now there was a break of structure here, you get. So as we broke this structure, possibly would be looking for some kind of order blocks up, you get. We can be looking for some kind of order blocks up, and there are a lot of things, RTO, that the ones that I've been talking about, you get. RTO mitigation, you get. So those things, if you watch my previous videos, I've been stressing them, you get. So basically, for instance, now this run from up to down here, it was targeting these lows previously, you get, these lows. So sometimes these order blocks, they can provide us with the range that we are trading in. But now, given that today we are sharing indicators, even indicators, they can be hopeful, you get. They can be hopeful as we trade, you get. They can be hopeful as we trade. So let me quickly add some indicators. So on the main chart, we are going to be adding two indicators, and these are going to be moving averages. So the first one is going to be period 80, shift 0, method linear weighted, apply to low, you get. Apply to low. For period 80, it is applied to low. Then the color, let's make it blue, you get. Let's make it blue. So don't forget, period 80, method linear weighted, shift 0, apply to low. So even on the mobile phone, that's what you'll be using. So we add it, and that's how our chart is looking. So basically, at least when we add the moving average, it is giving us some kind of picture, you get. Basically, if at all, for instance, if at all, let's say prices crossed up, you get, then maybe we would be considering to buy, you get. At least now it has changed the way we are seeing the chart, you get. It has changed the way we are looking at the chart, you get. So at least now it's helping us. So now the next thing we are going to do is that we are going to add another moving average to the main chart, you get. So the more we add possibly some indicators, the more we shall get a better picture, you get. But now, even now, with this single moving average, when prices had crossed now down on the 50 minutes time frame, you can see if you were taking sell entries, you could be profitable. And if they crossed up and then you were taking buying entries, you could be profitable. It crosses down, you take sell entries, you'll be profitable, you see. So now we are going to add another one, and it's going to be a moving average also. So we come and add it. It's going to be period 90, you get. Period 90, method linear weighted, shift 0. Then for this one, let's apply it to high, you get. We are going to be applying it to high. So be careful with this. They're going to be of the same color. Period 90, method linear weighted, shift 0, apply it to high. We add it like that, you get. When we add it like that, what we know is that they will never cross. We cannot see them crossing. They may get close to each other, but they will not cross, you get. And now for these ones, on the main chart, you can see that they're going to be actually, even when you're using, let's say, price action. For instance, if I had looked at the break of structure here, and then let's say I was considering that the market is now bearish, you can see that even here this consolidation that was happening was below. You get, this consolidation was below these moving averages, and then you can see that they were confirming a sell. And when prices cross above, candles start forming above on the 15 minute time frame. By the way, one of the best things about it is that you're going to see opportunities every day, but like they are not like on 1 minute where anytime you're late, you get. So basically, which means if at all, let's say we have this period separators on, this is today. If at all I was trading and then maybe let's go on M5 and then you see, you get, and then you see. So if at all I had not they had crossed above, you get, so I had my time to get in, you get your time, you have your time to jump onto the trend, and then you be profitable for the rest of the day, you get. But this is not all, we are adding more indicators. So we are going to quickly add more 2 indicators, and one of them is going to be let me see, let's go to oscillators. We are going to go oscillators, then we are going to add a relative strength index, you get. So for the RSI, these are the parameters. Period 1, you get, it's period 1, then apply to close. Style is blue, you get, style is blue. Then for levels, we are going to add level 90, level 10, and level 50. Then the color is black. Basically, I want those lines to be black, you get. So that's it. So we click OK, and now basically for the RSI, it's going to be helping us to hold the next indicator that we're going to add, and this is going to be the MACD. So on PC, if you want to combine more than one indicator in a single indicator window, you click on it, you get. Let's say the MACD, we click on it and it lights blue, you get, it gets highlighted, then you drag it to this indicator window, you get. And these are going to be the parameters. The first EMA is going to be period 12, the MACD SMA is period 9, apply to close. Actually, the first EMA is 12, the slow EMA is 26, the MACD SMA is 9, you get, apply to close. Then for main is going to be green, and then signal is red, you get. Take note of those. Then for the levels, nothing, you get. Then we click OK, you get. So our MACD final has been added. So now we can close off that. We can close off that indicator, that navigator window. So now what we want is now to backtest and try to see how we can utilize these opportunities that are provided on this indicator, on this indicator setup. Remember, it's RANGEBREAK 100, 50 minutes time frame. So at least I've talked about the main chart, you get, these 2 moving averages. Now we get down, you get. Now when we get down to this MACD, there are quite a lot of things that we are going to be referencing it for. One of the things is that for instance, now the market is up here, you get, the market is up here. How would you take opportunities if the market is reversing back down, you get? Because we know at least the market moves as it makes pullbacks, you get. It moves up and then it comes down like that. It moves higher highs and higher lows, higher highs and higher lows, and then it can shift to make lower highs and lower lows, lower highs and lower lows, you get. At least we know that, and we expect that, you get. So sometimes we may know or even sometimes we may look at the behavior of the MACD to help us determine when the market is, let's say, is soon to cross these moving averages, you get. But concrete signals are going to be provided when they either cross above or they cross down, and then sometimes they just cross and then they just come and bounce off these moving averages, you get. So now for downward trends, you get, for downward trends, by the for concrete, let's start with the upward trends, you get. You're going to find that whenever the MACD, you get, whenever the MACD crosses above, it starts to oscillate from above. Let's say if at all it's above 50, we have our RSI, you get. Once the MACD starts to rotate above 50, it starts to form these bars above 50, you get. This is what I'm talking about here. When these bars start to form upwards, you get, when they start from upwards, and then the market has crossed these 2 moving averages upwards, we start to take buying entries. You get, we take buying entries. And when you see the market crosses and then the MACD starts to form these bars downwards, you get downwards, and then also the candles break below these moving averages, we believe there we are in a downward trend. By the way, this has a very high win rate, you get, when you backtest it. But you guys don't be taking these things just to real accounts, you get, to real accounts. You backtest it and then you try to analyze it, you try to look for the shortcomings. You guys, I really feel for anyone who just takes trades recklessly. I call it reckless just because if at all you think this is trading and you don't treat it like a business and then you just go on your real account, you guys, you will lose. Personally, I've been a victim. I used to lose a lot of money, basically because I could watch maybe one video and then I jump onto the charts, you get. I don't wish it to anyone. I want everyone to be a winner, you get, though we cannot be all winners, you get. But I believe if you're persistent and if you really take education serious, you will become a winner someday, you get. So you backtest these things and then you practice on a demo, you get, you practice on a demo. But at least you're going to find that most of the time when candles form below these moving averages and then you see the MACD also, the bars start form down. When they start forming down, you get, then we are in a downward trend. The beauty about the 15 minutes time frame is that at least even if you've not caught it immediately, you can just jump onto it and then you take your entries, like you take your positions and then you be profitable, you get. So this is range break. They cross above, they start to form above, you get, they started forming above here and then you can see that it also crossed above here and then you can see that you were profitable for that day. And then by the way, you're going to find that I normally say that for these assets that we trade, at least whoever is moving the market, we believe, by the personally, my strategy, I believe there's someone behind the movement of the market. At least they provide an opportunity each day. There is that clean move that normally happens, you get, that normally happens. So we need to be careful as we take entries, or we can utilize these indicators sometimes to spot those clean moves of the day, you get. We benefit from them. At least in each and every day you're going to find that there is that move, you get. Every day it crossed below and then it also crosses below here and then you take your entries. At least you would be profitable there. For sure, I'll be honest to you, for finding clear targets, clear take profit targets. By the way, let me quickly talk about that. I was going to forget that. Now for take profit levels, one, I would recommend that you watch one of my price action videos. Maybe the last two videos, they were purely price action. I wasn't using any indicators. By the personally, when I'm trading, I purely use price action. Like, I don't use indicators, you get, but they will help you. But for instance, now when you if candles started forming below here, you get, if they started forming below here, where would be your TP, your take profit level? Now you can look at some of the holding levels of, let's say, support. If at all it's a sell signal, you get, you can look for some strong levels of, let's say, support, you get, and then you're going to be finding them surely. Now for instance, you can see that the market came to this area and then it reversed back. Yes, we were in an upward trend. Yes, this was an upward trend. Oh, the market was trending up, as we can see. It is in an upward trend, but then you can see that as it reached here, much as we're in an upward trend, it formed some kind of support, you get. It formed some kind of support. So at least when we get a sell signal here, you get, this one becomes a significant level for us to take profit, you get. At least we'll be considering this level to be our take profit. Now you can see that the market reached here and eventually it reversed, you get. For those that have been that have some kind of information on price action, at least there you can know the holding levels where we are going to hit, you get, we are going to hit. And then maybe the next thing, surely, for these spiking indices, it's really tricky to do price action. You get, it's tricky, I'll be honest to you, for range break and boom and crash. So for these ones, it's really okay for you to use some indicators. You get, they could be helpful to you because the market structure of these spiking indices more so on lower time frames like the M15. At least even on M15 there you can see the market structure, but it can be tricky. But even these indicators, trust me, if you're using them below 15 minutes time, the 15 minutes time frame, it's going to be tricky for you. You get, it's gonna be tricky for you. For now, I would recommend that you backtest, and I also recommend that you practice this on a demo. I recommend that you get more knowledge about trading. You get, I would recommend that you guys take it serious to look for knowledge, not a single video. You get, keep learning, keep practicing, and then you'll be a winner someday. For now, I wish you the best and peace.